Let's ask Bill Bishop, publisher of the Sinocism China Newsletter, and Derek Scissors, Asia economist at the American Enterprise Institute. It's great to have you both here. Bill, do you agree with Tepper about the significance of these measures and the impact they're likely to have?
So I do agree with him about the stock market. I think the comments, especially from the PBOC chief Peng Gongshou a couple of days ago about these facilities where we'll give 500 billion RMB and then we'll give 500 more and 500 more if we need it. And then the Politburo meeting today, normally the September Politburo meeting is not about the economy. This one was specifically about the economy, and the readout specifically said boosting the capital market. I think we are very much they are going to really push out a bazooka to get stock prices up. The rest of the economy, the problems with the real estate crises, the debt, the measures they've taken this week are, I think, much smaller steps towards resolving that, much smaller steps towards resolving the real crisis of confidence in the economy. But I do think that we're on the cusp of at least a near-term real pop in in sort of Chinese stock market, Chinese stock prices.
And obviously, I respect what you and Tepper are saying. What I don't understand, Bill, is if the government really wanted to improve stock prices and economic performance, why would they have pursued so aggressively these measures to crack down on their most innovative and successful tech giants? And is there any way that they can undo some of that now?
Well, that's a great question. I think in some ways this might be analogous to the sudden flip you had at the end of dynamic zero COVID in sort of late 2021, where you had policies that worked for a while, then became disastrous, and a resistance at the top to change until suddenly they changed. And so I think if we go back, I think it was in May, there was a meeting where Xi Jinping was quoted as basically asking, like, where are my unicorns? Meaning what happened to all these, billion-dollar valuation tech companies? And since then, you've seen a series of moves to revitalize venture capital, to fix the capital market, because they understand that if they want to break through the U.S. technology chokeholds, if they want to build out a real innovative science and technology companies that are focused on hard tech, they need to have functioning capital markets that allow for past liquidity. And so I think you've seen over the last several months this shift that we have to fix the capital markets. And then for whatever reason, it took a while for the sort of policymakers to convince the big guy. The big guy seems to have changed his mind now. And so then I think that's what you're seeing rolling out this week.
That's fascinating. I'm glad you're able to give us that context. Derek, I'm glad you're here today as well, because we have bookended these developments. I think literally the last time we spoke was when you said, we talked about, I said, what do you do with Alibaba now that the government has completely put its boot on their neck and shows, and you said it's like a utility. It's not going to go away, but the upside is capped. Are things fundamentally different now, or do you think this is just a sort of a temporary breakthrough of some sunlight and the clouds are going to kind of quickly come back together again?
Yeah, much more the latter. Look, there wasn't a single mention of reform, pro-market reform, pro-property rights, pro-competition reform in any of these steps. People aren't reacting to them that way. They're reacting to them as asset price boosts. Instead of saying, hey, we want to let successful private companies thrive, and that'll drive their stock market prices up. They're like, hey, boost the stock market, because they don't really want private companies to especially thrive. They do want, at least for the moment, higher stock prices. So I don't think this is going to help private companies in any significant way, because that attitude hasn't changed. They're still arresting people for long periods of time for saying the wrong thing, which prevents the kind of information flow necessary for good companies to be rewarded. And let's remember, even on stocks, I completely agree that there's a reason to be bullish on Chinese stocks for the next 2 months or so. But that's how long Chinese stock market rallies last. The peak of the Shanghai Composite was in 2007. So anyone saying I have a multi-year bullish view on Chinese stocks has been wrong every year since then.
Bill, I'm very, very sympathetic to that view. So for those in the audience who are listening,
and
oh, you agree too? All right.
No, I absolutely agree. I think this is a sort of short-term real stimulus for the asset prices. But as Derek said, these do not yet look like there's any sort of fundamental shift in fixing some of the underlying problems. And really, the biggest problem is around the politics and the political economy. And so far, at least, politics are still in command. And that, I think, will be a bit of a break on future growth until they sort of can work through some of the bigger issues that are suppressing a lot of private activity in the country. Again, perhaps we're on the cusp of that shift because things have gotten so bad and there's so many economic downturn and the loss of confidence is starting to cause real social issues and social stability issues. Yeah. It's possible, but what we've seen this week so far is not dispositive that is what is happening.